As we enter a whole new day in trade, let's take a look at the global cues from last night and get a sense of where we're likely to trade today, as well as how Asia is performing this morning. Now, the reason why we didn't have cues from the US last night is because the US markets were actually shut for a holiday. However, we do have futures to look at, and futures are trending very positively this morning. As we speak, Dow futures are up 140 points, and S&P 500 and Nasdaq futures are up 0.5%. The SGX has already turned positive. Now, let's put this into perspective. This move comes after American indices had a very tough week last week. The Nasdaq and S&P lost over 1%. In fact, last week they lost 1.5%, and the Dow was down around 0.9%. It was the worst week for the three major benchmarks since as far back as October. So, we're definitely seeing a rebound. This week, investors will be looking out for US earnings that are coming out across the board. Those will be very important. Also, they're looking for constructive cooperation within the Senate versus a replay of what we saw in 2020. So let's see what happens. Asia this morning is reacting positively on the back of a strong US handover, right? So Japan, the Nikkei is up 1%. The Topix is up 0.46% in early trade. The South Korea's Kospi is up 0.11% in early trade. And the S&P ASX 200 in Australia is up around a whole percent. European stocks anticipated an up move yesterday. They actually closed higher. The Stoxx 600 was up around 0.2%. Auto stocks gained 1.3%, and most of your sectors and major bourses ended the day in positive territory or climbing. Britain's FTSE index, that was one area which bucked the trend. It actually fell yesterday, 2%, because the UK is, of course, having its own set of issues and, is a very different situation to what's happening in Europe. The oil prices fell. Despite the good action in equity, oil prices continued to fall yesterday from their 11th month high seen just a few weeks ago. Brent fell 30 cents or 0.5% to $54.79 per barrel. US oil, that's WTI, fell by 21 cents or 0.4% to settle at $52.15 per barrel. So, of course, China's having huge resurgence. We all know that Europe is also seeing a big uptick in cases. We're in the final weeks of vaccine initial rollout, but till we start seeing mass numbers being vaccinated, oil outlook might continue to look a bit grim, and prices seem to be reflecting that. Gold prices also dropped yesterday, which is what some might consider a good sign, because it's now down to a 1.5-month low, and typically gold moves up when there's volatility in the market and people are seeking for a safe haven asset. So it doesn't seem that there's that kind of urgent need for flocking to a safe haven asset right now among equity investors. However, let's also remember gold is weaker because the US dollar has really gained. The US dollar has strengthened to its highest in 4 weeks, and that, of course, is making gold expensive for other currency buyers. So spot gold fell 0.3% to $1,820 per ounce, and then US gold futures eased 0.7% to $1,816 per ounce.